How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be breaking down the markets, taking a look at the S&P, the Dow, and the Nasdaq, and we're also going to be talking about what I personally did in these markets today. And I also want to break down with you all a bunch of stocks and a bunch of ETFs that I'm watching and that I'm looking to trade right now in this current environment that we're in this crazy, volatile stock market. And if you guys enjoy this video, all I ask from you is to simply go down below for me and hit that like button, and also consider subscribing to the channel if you want to see further content like this. And if you want 2 free stocks from Webull valued up to $1,400, that is linked down below in the description box. All you have to do is put in $100 and you'll get your 2 free stocks. So let's get right into the video today, guys, starting off with the S&P. And based on this 5-day, 5-minute chart, the bulls are in charge heading into this weekend. The S&P, and by the way, tomorrow on Friday, it's Good Friday, so the market is closed. So that's a warning to anybody out there that didn't know that. The next trading day we're going to have is on Monday. So heading into this long weekend, the S&P, the bulls are in charge, right? Up $40 at the close today, up almost 1.5%. And why are the bulls in charge? Well, these technicals are telling a story, right? So let's break it down. We saw a high today on the S&P at about 2820, and the fact that we're almost back to 3,000 in literally the snap of a finger, that's insane, but that's a whole different topic for a whole different story, right? Or a whole different video. So we hit that high, 2820. That's the higher high in the uptrend, right? And take a look at where we pulled down to and where we held. We pulled down to 2760, which we've been talking about this general area on the S&P between 2730, 40, 50, 60. This general area has been a resistance on the S&P these past couple of days. And if we pull back this chart a bit to this 30-day chart, you can see a couple weeks ago, it was a resistance. So the fact that we broke that yesterday was extremely bullish. And the fact that we actually pulled down, we held it as a support and actually closed into the market close on kind of an upswing, that's extremely bullish as well. So the S&P at this point, you know, if we pop higher on Monday, which anything could happen, guys, who knows what's going to happen over this long weekend, but let's say we start to trend back up above these moving averages. We push to 2820 into the 2800s again. That's going to mean that from a technical perspective, the markets are pushing higher. So overall, very, very bullish day in the markets today, especially because of that pull down hold heading into the close. That was very, very huge here on the S&P, at least from a bullish perspective, right? And taking a look at the Dow today, the Dow didn't do as well as the S&P, but still up almost 300 points on the day, up 1.2%. And just like the S&P, we held that 180 SMA at a higher low today. We pretty much held previous resistances from the past 2 days of trading as new levels of support. So that's very good from a technical perspective. And the bulls heading into the weekend are large and in charge. And that's just as of now, guys. Like I said, anything can happen. You know, this market can switch on a dime, which is why your strategy in this market, your trading arsenal, has to switch on a dime as well. Like I've been saying in these videos, it doesn't matter whether the market's crashing, yada, yada, yada. Well, it does matter at the end of the day, but from a trading perspective, if you can adapt to any situation, whether the market's up, down, sideways, whatever, you know, you're going to be able to make money in every situation. And obviously, you're not going to open your computer one day and make money in every market. It takes a lot of the time years, and that's honesty here, it takes years to get decent at trading. And you know, but if you want to put in the work, you know, you can definitely make money in any direction. And taking a look at the Nasdaq here, which, guys, this is actually insane. I'm looking at it now, up only $9 at the close, up only $9 at the close, up 0.1%. So honestly, the bulls are, I guess you can say, they're still in charge here on the Nasdaq as well on the 5-day 5-minute. It seems like we didn't actually know. We did push to a high at 8,300. That's the higher high in the trend, right? And overall, we are holding, I'd say, yesterday's highs at the close, so as a new support. So that's a pretty solid sign, as well as holding this 180 SMA into the close as well. So for, honestly, it to be extremely bullish, it's still slightly bullish here, but obviously for us to see a massive move, it would have been much more bullish if we closed above 8,300. But in general, for next week, 8,300 plus is what I'm looking for in the Nasdaq if I want to play, let's say, one of these leveraged ETFs such as TQQQ, which goes up whenever the Nasdaq goes up. That's kind of what I'm looking for in the Nasdaq. And like I say in these videos all the time, guys, don't force yourself to trade leveraged ETFs if you're not ready for it quite yet, because I truly recommend these not to beginners. I really don't recommend them to beginners, but more to intermediate and more advanced traders that kind of know how they work. That's just me being honest, and I'm really just trying to help you guys from losing money, because the truth is I was a beginner once, and I dabbled with these, and I've had stories on the YouTube channel in the past before that I've told you guys I've lost 40, 50, 60%, bag holding these, and trust me, it's something that you do not want to go through. So overall, let me know down below in the comments, what are your thoughts on the market? A quick little CV update. You guys know I don't do CV updates every day. This is not a news channel for the CV. I'm sure you guys are tired of hearing about it, but let's just go over the numbers very quickly. And, for the global cases right now, it's almost 1.6 million. And get this, guys. Remember a couple days ago I said about one-tenth of the population of the U.S. Has it, right? Well, now the cases are about 460K in the U.S., which means obviously even more than one-tenth of the population have it now. So this thing, although it might be slowing down in some areas of the United States, in the world in general, it's still growing, guys. It's still growing, and honestly, from a kind of worst case scenario, if this thing starts spreading, which it is obviously, but if it starts spreading across the U.S., then we get some of these states that haven't been hit too hard. If they start getting hit hard, shutting the state down, craziness there, more job losses, that is where this can really just take a turn for the worse. And at this point, the markets, it seems like they're pricing in kind of the perfect scenario, right? We're going to open up, economy's going back to normal, everything's going to be, sunshine, rainbows, dandy, everything's going to be great, right? And if we get, the thing is, if we get one kind of, move in a different trajectory, if we kind of get thrown off of this path where, let's say, the economy opens back up again, we get reinfections, it's going to stay here longer than expected, that is where we can see the market take a turn for the worse, because that's a scenario that it seems like the market isn't really pricing in anymore. It seems like the market now being up from its lows. Let's take a look. The S&P up from 2,100. It's got to be up like 30% at this point. Nah, I'm exaggerating, like 20%, right? So we're moving so aggressively up to the point where we're not really pricing in many kind of negative scenarios at this point, other than kind of the ultimate scenario that everyone's hoping for, which is we open up and then everything goes back to normal. And I'm kind of on the side of, I'm being a bit skeptical. I don't think everything's going to go back to normal, which is why I'm not aggressively buying into the stock market. I'm trading the stock market. I'm pulling an income from the stock market, trading it. But long-term positions, I haven't really been buying really anything recently, guys. I'm being completely honest. I was buying down here in the 2100, 2200 range on the S&P. I was buying some stocks there, but at this point, a lot of the stocks that I was buying, they're back to the prices pretty much that they were almost before this CV. Like one of them is J&J. I was buying J&J in some of my accounts down here in the 110s, and now it's almost back to where it was before this craziness. So this is a sign that, I want to wait. This is a sign that we kind of are pricing in perfection. And for me, I'm not looking to buy into this. I'm looking to buy into more weakness if we ever get it. And if we don't, I miss an opportunity, and I'll have to wait for the next correction, which, again, I can see that happening pretty soon. It depends on the CV, guys. That's what you got to understand. No one really knows the answer. All we can do is, like I said before, drop on a dime or switch and pivot on a dime and kind of just alter our strategies as the market moves. So for me, what I personally did today in this market is, if you guys were in the Discord chat, which is linked down below in the description, you saw this. I traded CCL today, and CCL was a roller coaster, no doubt about it. If I pull up this daily chart, you can see we ran up to 1370 all the way back down to about 1190. That's a crazy swing of about $2 in one trading day. We tested pre-market supports, it seems like. Now we're rallying back up into the close, but for me, I caught this move at about 9:45 a.m. Eastern Standard Time. And let me show you guys exactly where I got in. And if you weren't watching the chart like a hawk, this is a move that you probably would have missed. It was one of those moves that I would have missed, honestly, if I wasn't watching CCL. But since I was watching it like a hawk, I got in. And we can see it. It was right here. 9:45, right? We started pulling down from 1350 down to about 1315. And this general area of 1315, if I pull back, this was the pre-market high. Notice how pre-market high was at around 1320 to 1315. So the fact that we actually held that level and we started to rally up, that gave me some confidence into getting into CCL at this point. And ultimately, my limit order was at $13.20. That is where I ended up getting in, and I put a limit sell right away at $13.50, which I ended up getting filled a couple of minutes later. So again, if you weren't watching this, actually, I was in it for about 10 minutes or something like that, right around 10 minutes. But either way, if you weren't watching this, it would have slipped away from you, because this dip literally took about a minute or two, and then it rallied back up, consolidated a bit, and then as it ripped up here, that is where I ended up selling right before the peak, about 25 cents before the peak at 13.73 before it collapsed. And that's kind of what I did in terms of CCL. And if you guys recall, I was in GLD, some GLD shares from a swing position from a couple of days ago. I believe that was from either Monday or Tuesday. I day traded it one day earlier this week. I made some profits there, kept some shares to swing them, and you guys can see today was a very strong day for GLD. And I wanted to take a majority of the shares off of, take profits on the majority of my shares, because we're heading into a long weekend, right? I don't want to have a huge open position heading into the weekend, because anything could happen. Although I am bullish gold, I don't think it's collapsing, but just to play it safe, lock in the profits. And like I always say, I never went broke. No one ever went broke by locking in profits. So I got out at around 158, 50-ish, 158.40 if I remember correctly. And overall, from 155, which was my entry point on these shares, again, I forget which day it was. I think it might have been this day. But either way, from 155 up to 158, that was a solid 2% swing trade roughly. 2.2, 2.3, that general area percent on a swing trade, that's pretty solid. And this leg up we're seeing in GLD is quite bullish, and I think it'll remain bullish, and I'm looking to re-enter heading into this week. This next upcoming week. So let me know down below in the comments, what did you guys do? I would love to know what you guys did in terms of your trades, and again, any thoughts you have on individual stocks and the markets in general. So we got a deal in crude oil today. We got a deal in crude oil, and the markets kind of sold the news. You guys can see it here. We actually spiked up quite aggressively at one point today. You can see it up to $28 a barrel. That was at 10:30. I believe that's when the meeting actually started, and then we actually fell all the way down to $22. So if you guys shorted any oil companies, any ETFs, whatever it may be, let me know down below, and I'd love to know how you guys did. I personally did not, but it seems like the markets kind of expected a bigger daily cut in terms of this deal. So let's go over some notes here that I have on my phone. So Saudi Arabia and Russia is set to cut 10 million barrels, and I almost said it in the Trump voice there, million. I know you guys know that. I look up Trump billions and billions compilation on YouTube. Thank me later. That thing is hilarious. But it is set to cut, Saudi and Russia, they're set to cut 10 million barrels a day of its oil output for 2 months. That compares with estimate, and take a look at this, guys. That compares with estimates for demand loss of as much as 35 million barrels a day. That is crazy. 35 million barrels a day in demand loss. Just having these airlines parked, they're not operating at full capacity. These cruise lines, all these, companies that need oil, a lot of them aren't operating. It's insane, what's going on right now in terms of, this oil market. And Saudi Arabia and Russia both agreed to cut output to about 8.5 million barrels a day in May and June, according to delegates. Saudi Arabia was pumping about 9.7 million barrels a day in February. They ramped that up, massively increased it in the last 6 weeks, and obviously now with this deal, they're doing a cut. So obviously the price of oil did not act too bullish because of that. You'd think, right? But it seems like the market is selling the news. Maybe they wanted a bigger daily cut than 10 million. Obviously, Trump was saying 10, 15 million. That didn't happen, at least the 15 million figure. But we're going to see how this pans out. But in the short term, at least, I'm thinking USO puts. Obviously, the move was kind of made. If you were in puts earlier today or even yesterday or the day before, you probably made a pretty good sum of money today. But in the short term, I can see this continuing having pressure to the downside. Crude oil, that's a complete speculation, but if it does, USO is going to see more downside, which is why those puts may come in handy. When we take a look at some other big oil names, Exxon didn't do too poorly today, down only $1, or rather 1.6%. Occidental Petroleum down about 1.3%. When we have, what's the ticker on this one? I always forget it. When we have Chevron, CVX down only about 2%, down about $1.60. So the stocks didn't get hit as hard. Well, USO, which is an ETF, did get hit pretty hard, but they didn't get hit as hard as crude oil itself, which is interesting. And heading into this next week, guys, the truth is I'm focusing a lot on silver as well. Silver, which, like gold, I believe in it. I believe in it in the short term, and I think there is potential. If we take a look at the silver futures, they were up 4% today, up about 60 cents. And pulling back on this chart, silver has been quite bullish for some time now, since $11, that bottom at about the 19th of March, and that's not some time. I'm acting like it's been bullish for years now, but over these past 2 weeks, 3 weeks, it's been quite bullish. So an ETF that trades on silver is SLV. SLV, kind of like it's, I treat it as the GLD of gold. This is the GLD of silver in a way, SLV that is. And this has been, extremely bullish, up to $14 right now. You guys can see down here, it hit a bottom at about $10. Not saying it's a bottom, but, at least on this 2-hour chart, we hit a bottom. So I'm just watching these in general as, more QE, all of this, inflationary pressure on the dollar, continues, in my personal opinion, as there's unlimited quantitative easing at this point. I think more people are going to be pushing money into metals, and we've seen that in the reflection of their price. SLV, not even SLV, but silver and gold in general, the physical prices of the metals, they're up over the past couple of weeks. And I think, again, that is going to continue here. So I'm watching SLV, watching GLD, gold and silver like a hawk in this environment. Another one that I almost took today in terms of a trade was DGAS. DGAS did very well, but being kind of risky, these ETNs, they're pretty risky. I didn't want to, risk it heading into a longer term weekend. I was already green on the day from GLD and CCL. I almost took it again, but sometimes, guys, over trading is a bad thing. But either way, DGAS did very well today, up 8%, up $20 per share. And moving forward, I think there is a lot of potential here in DGAS. I'm not going to go too in depth on the natural gas report that came out today. Maybe I'll do a video on that in the next couple of days. But ultimately, we're seeing a lot of bullish momentum after this report came out today. And overall, I can see DGAS seeing a bit of more potential to the upside, as NGK20, which are the futures we're watching right now, are showing a pretty strong sign of the continuation of the overall downtrend. You guys can see it here on the 4-hour chart. We hit a lower high. We're now breaking below moving averages, being at around 175. We're going to test 170 this week, most likely. So keep an eye on DGAS as, again, it goes up whenever natural gas is going down at a 3x rate. And one of the main stocks I was watching today, again, there's a difference between stocks and ETNs and ETFs. ETNs, leveraged ETNs, they don't move like stocks. They're very different. SQ is a stock, though. This one I was watching in the range of about $60 to about $64, $65. You guys can see we're consolidating quite nicely at about $59 at this point. So heading into this week, I want to see, if the markets stay green, which is very possible, this could be a move. And we've seen SQ move like crazy in the matter of a day. We've seen it. Heck, we saw it this morning. It went from $58 to $64 in the snap of a finger, and it can do that again. So I'm looking to see if that happens from $60 to about $65. That is a pretty chunky move there of about 8 to 9% potential of profit that we can make. So overall, guys, I don't want to make this video too long. We kind of went over everything that I'm kind of watching heading into this long weekend. I'll probably end up making a video tomorrow again, honestly, because what else am I going to be doing in the quarantine, right, guys? I'm in New Jersey. For those of you guys that don't know, we're getting hit like crazy right now, so I'm going to be in the house. Might as well make another video going over some more stocks. But overall, that's what I'm watching. Gold, silver, these leveraged ETNs like natural gas that I just talked about. And in general, the market ETFs, guys. SPXL, SPXS, I go over these all the time. SPXL is a long ETF. Let's say you want to go long the S&P with a leveraged product. SPXL is for you because it goes up 3 times what the S&P goes up in a day. And let's say you want to short the S&P, SPXS could be for you, which goes up 3 times what the S&P is going down. So let's say the S&P is down one day, you can make 3% potentially that day. If it's down 1% one day, you can make 3% potentially on SPXS. So these are some to kind of keep an eye on, keep on your watch lists. And again, subscribe to the channel because I will probably make a video tomorrow going over a bunch more stocks that I'm watching and kind of plans for this upcoming week. So if you guys enjoyed this video, hit that like button for me, consider subscribing to the channel, and don't forget to claim your 2 free stocks from Webull valued up to $1,400 using my affiliate link down below in the description box. All you have to do is put in $100 and you'll get your 2 free stocks valued up to $1,400. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Peace out.